BlackRock CEO warns of a 20% market drop. Should investors brace for impact? A major warning just shook Wall Street. Larry Fink, the CEO of BlackRock, the world's largest asset manager, has issued a stark alert. Markets could drop by 20% if current conditions continue to deteriorate. That's right. The man overseeing nearly $10 trillion in assets is warning investors to prepare for a major correction. But what's behind this bold prediction? Is it just caution, or a clear sign that turbulence lies ahead? Let's break it all down and talk about how you can prepare. Who is Larry Fink, and why his words matter? Before we dive into the details, let's be clear. Larry Fink is not just any Wall Street executive. He's the Chief Executive Officer of BlackRock, a firm that manages money for governments, pensions, corporations, and millions of individual investors worldwide. When Larry Fink speaks, markets listen. His insights often reflect global capital flows, institutional behavior, and macroeconomic trends at the highest level. And now, he's sounding the alarm. What triggered the warning? Speaking at a private investor forum this week, Fink highlighted several critical warning signs that could lead to a serious market correction. Escalating global trade tensions. With the US imposing tariffs and countries like China retaliating, global trade is under immense pressure. This is disrupting supply chains, dampening earnings forecasts, and increasing inflation risks. Persistent inflation. Despite central bank efforts, inflation remains sticky. Rising prices for goods, labor, and energy are squeezing corporate profits and eroding consumer spending power. Geopolitical instability. From the Russia-Ukraine conflict to tensions in Asia and the Middle East, global uncertainty is weighing heavily on investor sentiment. Central bank policy confusion. Mixed signals from the Federal Reserve and other central banks are creating uncertainty around interest rates. Will they cut to support growth, or stay higher for longer to battle inflation? Fink's view? All of these factors combined could trigger a sharp 20% market correction if investor confidence collapses. What does a 20% drop look like? Let's get specific. If Fink's warning plays out, here's what it could mean. The S&P 500 could fall from current levels near 5,000 to around 4,000 points. The Dow Jones Industrial Average might drop by over 7,000 points. Nasdaq tech stocks, already facing valuation pressure, could fall even further, especially those without strong fundamentals. It wouldn't be a crash, but it would be a serious pullback. Enough to erase trillions in market value, unsettle portfolios, and force many investors to rethink their strategies. How are markets reacting? Following Fink's remarks, we saw immediate effects. Volatility spiked, with the VIX, Wall Street's fear gauge, rising sharply. Safe haven assets like gold and US Treasury bonds rallied. Risk assets, especially small-cap stocks and emerging market ETFs, took a hit. While markets haven't yet dropped 20%, the tone has clearly shifted. Investors are now asking, is this the start of something bigger? What should you do as an investor? If you're feeling nervous, you're not alone. But this isn't a time to panic. It's a time to plan. Here's what top analysts suggest. Review your risk exposure. If you're heavily invested in growth stocks or speculative sectors, consider rebalancing toward more defensive assets. Increase cash reserves. Having cash on hand allows you to buy during dips and provides peace of mind in turbulent markets. Diversify internationally. Not all markets will respond the same way. Exposure to different regions can help cushion volatility. Focus on quality. Strong companies with solid balance sheets, Steady earnings and reasonable valuations tend to weather downturns better. Stay long-term oriented. Market corrections are normal. Historically, markets have always recovered. Don't make short-term fear-based decisions that damage long-term goals. What is BlackRock doing? Interestingly, Fink mentioned that BlackRock is adjusting its strategy, increasing allocations to infrastructure and private markets, reducing exposure to high beta tech, building positions in sustainable energy and healthcare, boosting cash and short-duration bonds for liquidity. In short, they're preparing for choppier waters ahead. And when a firm managing nearly $10 trillion starts playing defense, it's worth paying attention. Could the market prove him wrong? Absolutely. Markets are unpredictable. Sentiment can shift quickly. If inflation eases, trade tensions cool, or the Fed pivots, we could see a rally instead of a correction. But the key takeaway is this: being prepared costs you nothing. Being caught off guard can cost you a lot. Larry Fink's message isn't panic, it's prudence. Final thoughts: panic or preparation? A potential 20% market drop is not something to ignore. Whether or not it materializes, this is your chance to check your financial health. Ask yourself, am I diversified? Can I handle a short-term downturn? Do I have a long-term plan? If the answer to all three is yes, you're already ahead of the game. What do you think? Will Fink's prediction come true, or is this just another headline? Drop your thoughts in the comments. Don't forget to like, subscribe, and turn on notifications, because in markets like these, knowledge is your greatest asset. Stay focused, stay flexible, and stay financially prepared.